Hi everyone, Joe Vitale, American Retirement Advisor with the Gradient Investments weekly talking points for the week ending October 15th, 2021. Let's get into the stocks. Equities were higher across all major global indices, with the U.S. benchmark S&P 500 was up 1.84%. The Russell 2000 added 1.47%, and the Nasdaq gained 2.18%. Now, overseas, the developed markets, which is the EFA, was up 2.42%, while the emerging markets gained 2.13%. In the U.S., mid-caps outperformed other equities by size, and growth stocks outperformed value. Materials and consumer discretionary were the best performing sectors, while communication services and healthcare were the laggards. In fixed income, interest rates declined for the benchmark 10-year Treasury by 2 basis points to 1.59%. Now, the yield curve flattened a little as the rates on a 2-year Treasury rose 9 basis points to 0.41%, and those on a 20-year maturity declined by 9 basis points to 2.02%. Now, with commodities, oil prices continue to rise for the 8th consecutive week, as you see at the pump. The West Texas crude ended the week up 3% to $81.73 per barrel. Price gains were driven by shortages for other energy, natural gas, and coal. Meanwhile, the leading oil producer countries, OPEC Plus, are keeping supplies tight. Now, here's the problem with that. As you see, we're asking people who don't like us very much to increase the oil supply. So we're kind of good luck with that. We were kind of energy independent. Now we have to go beg for that. They are talking about, if you're listening to the news, they're talking about that we may even see oil price at $100 a barrel by the end of the year. Some are even saying higher. Now, what's that going to mean to us? Where we're supposed to go down with gas prices, toward the end of the year because we're out of our peak, we're going to see those go up. So just be prepared for that. We're going to see that happen. Talk about economic data. Inflation for September was up 5.4% on a year-over-year basis, a tick higher than the prior month. As supply chain bottleneck is continued, energy rose 24.8% over the last 12 months. Excluding volatile food and energy, and the core consumer price index rose 4%. Now, because of higher inflation, Social Security monthly benefits will increase 5.9% beginning in January. That is the largest increase in nearly 40 years. But even at that increase, it's barely just keeping up. So you're going to see, you got a nice increase of Social Security check, which is great, but you're paying a lot more to fill the tank, a lot more for food. Look at chicken and everything in the stores today. We're seeing this inflation. They're not talking about it, but you go to the grocery store, you see it. So producer prices rose faster than consumer prices last month. The index of producer prices rose 8.6% over the last 12 months, while core PPI, which excludes food and energy and trade services, rose to 5.9%. The difference between the producer and consumer price indicates weaker profit margins for manufacturers. Now, a record number of employees quit in August, 4.3 million. This may have something to do with mandates, as we have heard. Now, the quit rate climbed to 2.9% from a 7-year low of 1.8%. during the height of the COVID crisis. So we're really going in the wrong direction here. We need to hire more and not lose people. This quits occurred as employees are seeking to fill 10.4 million job openings. We're seeing that no matter where you go, you see a labor shortage right now. So let's talk about company news. Goldman Sachs, which is the core select holding, beat revenues and earnings estimates by a wide margin due to strength in their investment banking and trading operations. Shares rose 3.38% for the week. Taiwan Semiconductors, a G40 holding, reported quarterly revenues and earnings that exceeded consensus expectations and raised revenue guidance for the coming quarter. The company also said it will build a semiconductor plant in Japan, and shares rose 4.38% for the week. That's good news. We could use the semiconductors, as you know. United Healthcare Group, which is a G50 core select holding, reported quarterly revenues and earnings that exceeded consensus expectations and raised revenue and earnings guidance for the coming quarter and the coming year, and shares were up 4.8% for the week. And that's it for the week. Thanks for being part of our ARA family. If we can help you at all, please give us a call at 855-756-5700 or visit us at aradvisorsinc.com. God bless you. We'll see you again next video.